Gold has officially smashed through the $5,000 barrier, and while the mainstream media is busy celebrating a new era for the yellow metal, the real story, the one that will define the greatest wealth transfer of our lifetime, is the accelerating terminal collapse of the fractional reserve silver system. We are no longer just looking at a price rally, we are witnessing the death of paper silver. If you are currently holding your wealth in digital contracts, silver ETFs, or unallocated bank accounts, you're standing on a trap door that is about to swing open. For decades, the COMEX in New York and the LBMA in London have operated on a mathematical lie, trading hundreds of paper ounces for every single physical ounce actually held in their vaults. But in March 2026, the music has finally stopped. The quiet takeover by industrial giants and sovereign nations has drained the registered inventories to a point of no return. When the COMEX runs dry, the global economy won't just see a price hike, it will experience a total systemic reset where the spot price becomes a historical relic and physical metal becomes unobtainable at any cost. Welcome back to Signal Scope Markets. To understand the gravity of what happens to your wealth when the vaults hit zero, you have to realize that the $85 silver we see flickering on our screens today is a ghost. It is a price discovery mechanism for a metal that the exchanges no longer actually possess in deliverable quantities. We are currently living through a liquidity illusion. For years, the bullion banks have used high-frequency trading and massive paper dumping to suppress the price of silver, keeping it artificially cheap to satisfy the industrial hunger of the West. But the 2026 landscape has changed the math forever. Industrial titans like Apple, Tesla, and Nvidia have come to a startling realization. The AI revolution and the global green energy transition are physically impossible without silver's unique conductivity. These companies are no longer waiting for the COMEX to settle their trades. They are bypassing the exchanges entirely, signing massive direct-to-mine offtake agreements that strip the supply before it ever reaches a public vault. This has created a shadow market where the real price of silver is already trading at a massive double-digit premium over the manipulated spot price. While the screen says $85, the industrial reality is closer to $120. When the remaining short positions on the exchange held by banks that never intended to deliver a single ounce are called for physical delivery by hungry investors and corporations, the COMEX will face a delivery default. In this scenario, the force majeure clauses buried in the fine print of your brokerage agreement will be triggered. This means your paper silver wealth won't be settled in the metal you thought you owned. It will be settled in depreciating US dollars at a fair market price, determined by the very exchange that failed you. You will be left holding cash that is losing purchasing power by the hour, while the physical metal gaps to $400 and becomes the most guarded asset on the planet. The fundamental drivers of this collapse are structural and irreversible. Silver has officially transitioned from a decorative precious metal into the world's most critical, strategic industrial oxygen. In 2026, the green revolution is no longer a policy goal, it is a resource war. Every solar panel, every 5G tower, and every high-performance AI chip requires silver. There is no cheaper substitute. As the West doubled down on its digital future, it forgot that the digital world is built on physical atoms. This neglect led to a decade of underinvestment in mining, and now the chickens have come home to roost. We are seeing a 200 million ounce annual deficit that is being plugged by draining the last remaining exchange vaults. Once those vaults reach tank bottoms, the point where the remaining bars are spoken for or are of insufficient purity, the paper market simply ceases to function. This is where the silver curtain comes into play. While the US and Europe were busy trading paper contracts, the East was accumulating physical weight. In early 2026, China, the world's largest refiner of silver, effectively placed a national security ban on silver exports. They aren't selling their silver for paper dollars anymore. They are keeping it to fuel their own dominance in the EV and AI sectors. This geopolitical strangling has left the Western COMEX as an empty shell. The U.S. investor is now caught in a pincer movement. On one side, an insatiable industrial demand that cannot be met, and on the other, a geopolitical rival that has stopped sharing the supply. This is why $400 silver is not a prediction. It is a mathematical inevitability based on the destruction of the supply chain. History provides the roadmap for what happens next. During the 1980 silver squeeze, the gold to silver ratio collapsed from 80:1 down to 15:1 in a matter of months. In 2026, we are staring at a repeat of that structural reality, but with a crucial difference. The currency is much weaker today. With gold firmly established above its $5,000 floor, a return to the historical 15:1 ratio, which reflects the actual geological abundance of silver in the Earth's crust, puts the price of silver at a staggering $330 per ounce. If the ratio overshoots, as it often does during a panic, we are looking at $450 or even $500 silver. However, the transition from $85 to these levels will be the most violent and volatile period in the history of the capital markets. Expect exchange holidays where the COMEX simply shuts down for days to evaluate market conditions. Expect overnight margin hikes where the cost to hold a silver contract increases by 50% or 100%, designed specifically to wipe out retail traders and force them to sell their positions to the banks. This is the heart of the silver trap. The institutions want your silver, and they will use every regulatory tool in the shed to shake you out of your position before the final moonshot. They are using the $85 level as a strategic kill zone, hunting stops and inducing panic selling among those who are over-leveraged. If you're playing the paper game, the house is currently rigged to ensure you lose. The death of paper silver also marks the end of the traditional banking short manipulation. For years, bullion banks have sold naked shorts, selling silver they didn't own to keep prices suppressed. They did this because a rising silver price is a canary in the coal mine for a failing currency. But in 2026, the canary isn't just singing, it's screaming. The banks are trapped. They cannot buy back their shorts because there is no physical metal available to cover them. And they cannot continue to short because the industrial buyers are taking delivery and walking away with the bars. This is the ultimate short squeeze. When the big shorts are forced to cover, they will have to bid against Apple, against the US Mint, and against the Chinese government. In that battle, the price doesn't just go up, it gaps up, moving $20 or $30 in a single trading session. For the US investor, the message is clear. The window of opportunity to secure physical silver at accessible prices is closing rapidly. We are moving into a world where silver will be priced like a strategic tech component rather than a commodity. Imagine trying to buy a kilogram of plutonium. That is how difficult it will be to source physical silver bars once the COMEX default is finalized. Your wealth is only as secure as your ability to touch it. If your silver exists only as a QSIP number on a brokerage statement, you are essentially an unsecured creditor to a system that is currently declaring intellectual and physical bankruptcy. As we move toward the end of 2026, the quiet takeover will be remembered as the greatest stealth accumulation in history. While the masses were distracted by crypto volatility and tech stocks, the world's most powerful entities were quietly cornering the market on the one element that makes the modern world possible. The era of cheap paper-backed silver is dead. The era of the $400 physical reality is here. You have to decide now whether you want to be a victim of the silver trap or a beneficiary of the greatest revaluation of our time. The vaults are empty, the paper is burning, and the only thing that matters is how much physical weight you have secured before the door slams shut for good.